All right, let's get this meeting started. Can you guys hear me okay? Yes. All right. Yes, we are. Thank you, Todd. All right, let's get this meeting started. Can you guys hear me okay? Okay, hold on. All right, hold on a second. I am going to record it. There's just some people coming into the room. Just give me a second, guys. Echo. All right. All right, so yeah, let me record this. All right, so let's get started. And like every week, look, I'm going off the cuff. I don't have any notes of what I'm going to talk about. I know exactly what I'm going to do. I'm going to try to find this week biggest winners. If you guys want to talk about the market, I'll briefly talk about the market. Those who are in the room know that I rarely talk about the market. I'm more interested in the individual names. So, if you look at the SPY for the most part, for the last month or so, we've been trading sideways. Okay. Not much going on, but underneath the surface, there's been some decent winners. And as individual swing traders, that is all we care about, is pretty much the individual swing ideas. When the market is in a corrective mode like it was here, then swing trading doesn't work as well because everything is moving as one. But right here, when we get the sideways action, this is when you get a chance to really outperform the S&P 500, when individual stocks are working and you're hitting the ball out the park with the individual names. So last week, what we did was very simply, we started with the scan that I believe is the best scan for the current market environment. Okay. We typically focus on mean reversion and momentum in the short term, because that's the way stocks move in the short term. They go up, they go down. They normally have this type of burst right over here where a stock will go up for multiple days in a row, maybe 4 or 5 days in a row, then sideways to down. So that's what we focus on. Just give me a second here, guys. All right, so let's get to that scan. If you guys remember last week, I said, look, the best scan right now is one where we're looking at the best performing stocks on a 3-month basis, on a 6-month basis, on a 1-year basis, and a year-to-date basis. All right, so that's 400 names. That's all we're looking at, 400 names. And we're going to look for contraction for the most part. Contraction leads to expansion, and we're going to look for a particular setup. What we're going to come across is we're going to come across what I believe for me are the A+ setups, which we spoke about last week. For example, let me give you guys, last week we flagged NNVC right over here, long 511 at 655. And what we have here is that we have a stock that no one knows. No one knows NNVC. The stock is trading 1.5 thousand shares, 11,000 shares. It's got a 1-for-20 reverse split, which I mentioned last week. A lot of people think that reverse splits are negative for companies. That's usually not the case. Normally when you see a reverse split, what you're going to see is that the stock will go sideways for a little bit longer, and then something like this happens. So with NNVC, here's an unknown name. No one knows this company. And what happens is that suddenly news comes out, and the stock trades here roughly 4.4 million shares. Then it trades here roughly 35 million shares, big volume, okay? And what you want to do is you want to wait until the stock starts to tighten up and you get some type of setup. Here, as a day trader, you're going to be fine. You can day trade a stock all day long. And normally when the stock does this type of move, this huge move, you normally get a secondary offering right off the bat, and you get a pullback. What you want to wait is you want to wait for it to set up. For example, right over here, stock is down 1, 2, 3, 4 days in a row. Okay, this is one of our setups. This is a mean reversion setups. Stocks down 3 days in a row and the more, and up today. This is the way the market trades. So you want to get long here going through this high which was 620 plus 10 cents. So the buy stop here was 630. This little yellow arrow here means I went long. So that's what we're looking for. This is the type of setup that we're looking for. So let's go through the list right now. We're going to start with the best performing stocks on a 3-month basis. These are not the strongest stocks. These are the best performing stocks. There's a huge difference. So let's go with WTRH. Same thing. The stock right here is trading nothing at all. 1 million shares, not bad. 1.3, 2.4. But suddenly here, news comes out and the stock trades 96 million shares. And then here it trades 100 million shares. That's 100 times what it was averaging here, or whatever it is, 50 times. That's not mom and pop buying this stock. Okay. So then what you get is you get the big move higher, then you get the consolidation, and then eventually 10 to 15 days later, it starts to set up. For example, here down 1, 2, 3, 4 days in a row. What happens here? You get an inside day. You want to get involved going through this high. Now, for tomorrow, the stock is down 3 days in a row. It printed an inside day. I like this setup for a 4 to 5 day swing. My buy stop is going to be 290. So WTRH, buy stop 290 with a initial stop right over here at 252. Okay. And what are we looking for? The target is up. All right. The time frame is 0 to 5 days. What we get within that burst, within that 5-day time frame is unknown. A lot of it depends on what's going on with the market. Okay. But the buy stop is known. The initial sell stop is known. The outcome is unknown. It either works or it doesn't work. It's that simple. And what we're looking for is this type of move right over here. And as some of you may know who are in the room, I like to sell on the way up. So I'll sell a piece plus 10%, plus 15%, plus 20%, and so on. And I'm moving my stop right alongside underneath. All right. So the first one on the list is WTRH. This one, AHPI was one again that we flagged last week right over here at 1223, had a big move to 1639 the next day. Again, this looks okay. Printed an inside day. I like the stock going through 1390, buy stop $14 a share, initial stop right over here at 1208. Now I realize that for some people who have a very short-term time frame, these stops might be a little bit wide. But what I'm interested in very simply is for a multi-day move. Number one. Number two, I want to make sure if I get stopped out of a trade is because something changed technically, not because I'm choking the trade or I'm playing it too tight. And there's nothing wrong with playing it tight, really tight. But the problem is that you might end up with a lot of wash trades. Okay. CODX, here's another one that we flagged last week. Same thing, guys. Here's a stock that's trading roughly 92,000 shares, 31,000 shares. Suddenly news comes out. It trades 35 million shares. You wait for it to consolidate for 10 to 15 days. At the very end of this consolidation, it starts to tighten up. And what you see here is an inside day. And that's when the inside day very simply just tells you that this is a big move from roughly $1 to roughly 203, $3 a share. So it's up roughly 200%. The stock has done nothing but go sideways, which means that if there are sellers there looking to sell some stock, there's a buyer there sucking up all that inventory. And at the very end, when that seller is done, or when the sellers are done, what you start to see is the price action starts to contract. The volume starts to contract as well. That's when you know that the stock is ready to move higher. And this is something that's been going on for a very long time. For those of you who used to subscribe to my stock of the week years ago, this was the A+ setup. And I'm going to show you here. This was the A+ setup where every single setup was the same when they hit the stock of the week. And here is, for example, the write-up on AXSM back in 2017 when the stock was trading at 951. And it says here, the bottom line is that this is a momentum play. Axum fits the bill of all of our stock of the week plays. It had a catalyst. that drove the stock higher on very big volume. To be exact, it was a phase 2 announcement. The stock traded 51 million shares, which is roughly 5 times the current flow of 11 million shares. All right. Since the stock has digested the move by trading sideways, there hasn't been much interest to sell the stock. As you can see in the chart below, the stock printed an inside day on the lowest volume, 285,000 shares since the catalyst. This is what typically happens right before the stock begins the second leg higher. This is the same thing that's going to happen over and over again with most of these stocks. So here you have a big move higher, trade sideways. Here's the inside day on 2.4 million shares when the average 20-day volume is 10 million shares. And here you can see 2.4 is pretty much the lowest ever since the big volume day. That's the key. So you have the price contraction and you have the volume contraction, okay? So let's go with the next one, BLPH. Here's another one that we flagged as well right over here, long at 1517, down 4 days in a row. Through this high, we got long at 1517. It's setting up again. I like the stock going through 1776, buy stop 1876, initial sell stop 1561. When I say initial that's the initial sell stop. As the stock starts to move higher, we want to sell some on the way up, and we also want to raise the stop from underneath the price. We want to make sure, if possible, that the first day, that's when we bear the biggest amount of risk. And hopefully after the first day, you get a situation like this where we got long here at 1517, which was a buy stop right above this high. And our sell stop was 1393. At the close of this day, after we bought it, the sell stop went from 1393 to roughly 1459. CAPR, here's another one. Same exact thing, guys. Stock is trading 275,000 shares, 5.3, 1.2. Suddenly news comes out. It trades 198 million shares in some COVID news. What happens here? Here's the inside day on very low volume relative to what the stock has been trading lately. We got long through this high at 7.25. Stock goes to 9.10 pre-market the next day. Right now, the stock is setting up again as a momentum, as a mean reversion play. It's down multiple days in a row. This is one of my go-to setups in the short term. In the short term, like I said, within 1 to 30 days, what matters the most is momentum and mean reversion. This is a mean reversion play right over here. Down 4 days in a row. I want to own the stock going through 639, buy stop 649, initial sell stop 556. Let's see what else we have here. mRNA. This is all the same story, guys. INO, same situation. Stock is trading 966,000 shares, 500,000 shares. Suddenly news comes out, trades 107 million shares, big move higher. You don't want to, you can get involved in this, but it's a little bit more riskier. If you're a day trader, you're fine. You can get involved in this all day. But what usually happens is you get the big volume, you get the move higher, you get the secondary offering, and then it starts to contract right over here through this high, down 4 days in a row. All these yellow arrows is where I got long, okay? I'm going to answer your questions in a little bit. RCUS, same thing. Stock is trading 337,000 shares, 73,000 shares. Big volume comes in on some type of news announcement, trades 5 million shares. You wait for it to consolidate 10 to 15 days. It starts to tighten up. And here's where we got long through this high right over here, 2758 on this day over here. Let's see if we can find something else. So hopefully by now you are, seeing the pattern. All right. Which is what we're looking at are stocks that no one knows, unknown companies that have been going sideways to down for a very long time. And then suddenly a catalyst, a news announcement comes out that takes the stock higher, and it has a very unusual volume here The stock trades 13 million shares when it usually trades 500,000 shares. Okay. And then what you want to do is 10 to 15 days later, you want to wait for the consolidation or for it to give you, offer you a good buying opportunity. APT, same thing, guys. Same story, same dance. 1.4 million shares. Right over here, nothing at all. 40,000 shares. News comes out on big volume. Look how it tightens up here at the very end. Inside day, almost an inside day, and off to the races. It goes to 40, and then 10 to 15 days later, it sets up again. Here's a mean reversion play down multiple days in a row. And the reason why you don't want to anticipate and buy it when it's down 3 days in a row is because 3 days can turn into 4, 4 into 5, 5 into 6, and 6 into 7, and so on. What you want to do is you want to wait for the change of that pattern of lower highs and lower lows to higher lows and higher highs. Again, right over here, through this high over here, and you have a very nice move here in the short term of roughly, that's an 80% move. Over here, you didn't get that much through this high, but again, the outcome of these trades are unknown. What we want to do is take advantage and get the most out of this little burst here. That's it. That's all we're looking to do. We got involved in this stock right over here last week at 1338 through this high over here, and it had a very decent move. You know, roughly 25, 26% already. Here's another one. BMRA. Prints an inside day on very low volume relative to what the stock normally trades. I like the stock going through 757, buy stop 767. And an initial stop right over here is $7 a share. Here's another one. ALT. We've gone through 19 stocks, and almost every stock so far that's been the best performer in the last 3 months has the same exact setup. And those of you in the room know that this is a setup right here. This video, how do I find swing setups? This was from 2017, I think. Same exact thing. If you go back, the video that I posted or the blog that I posted this morning, Contraction Leads to Expansion, was from 2015. So this thing has been working for a very long time. It just so happens that during this current market environment, this is what I believe is the best scan for right now. So ALT, same exact thing. The stock is trading down, beat up, 1 for 10 reverse split, 1 for 30 reverse split. Suddenly news comes out, it trades 26 million shares, sloppy, 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 and then you start to get that contraction right over here. This is what you're waiting for, okay? Yellow arrows where I got involved through this high, didn't do much, but right over here, off to the races, okay? VXRT, same exact thing, same play, same exact thing. So far, these are unknown names, okay? These are not your household names, but in the short term, you know, how strong a stock is on a 1-year basis, that's pretty much irrelevant. How much money they make for what we're looking to do, which is short-term swing trading, that's irrelevant. And you can see that here. Here's another one. Inside day, ATHX, buy stop. 313, initial sell stop right over here. Let's call it 280. Same exact thing, guys. This is also a COVID-19 play. It's important that if you can find themes in the market, if there's something that's really working, a certain theme, it's important that you recognize it and you play it. For example, a few years ago, we had the IQ, the Billy, the Sogo, IQ, which, you know, was the Chinese Netflix, whatever the case may be, and it took off. Then you had Sogo, then you had Billy, then you had HUYA. After that, remember the Bitcoin stocks back in 2017, Grow, Overstock, Mark, Riot. That's a theme. Then we had the weed stocks, ACB, Tilray. You got to find these themes. Right now, we have the work from home theme. All right, Zoom, Teldoc, and a few others. And you also have the COVID-19 plays. This happens to be a COVID-19 play. Here's your situation. A+ setup, my A+ setup right here. Stock is trading 155,000 shares, 370,000 shares. No one knows his stock. Okay. And what happens right over here? Big volume, 7.1 million shares. No big deal. But here, 8.4 million, 12 million, 19 million shares. The stock starts to trade sideways. It starts to consolidate. Price starts to contract. Here, you have an inside day on 2.6 million shares, which is pretty much the lowest volume, almost the lowest volume since this big move higher. Okay, so 313 is the buy stop. Initial sell stop is 280. Yeah, and this VAPO is setting up. Okay, let me just do this here. So here, this VAPO, this stock is getting ready. I might just take this tomorrow because it's down 4 days in a row. I like the stock going to 26.50, buy stop 26.60 with an initial stop right over here, 23.92. It's just too wide for me, but I'm going to flag it, which means that I want to keep track of it. I want to make sure I don't lose it. So I'm going to flag the stock. You know, stamp. Again, it's a beautiful inside day, almost an inside day. But here's a stock has a lot of momentum, goes up in very big volume, 7 million shares, relative speaking, relative to what the stock trades. The stock trades 290,000 shares, and it trades here 7 million shares. That's significant. Probably news came out. I think the stock is heavily shorted. I like the stock going through 197. So buy stop 197.10. Initial sell stop right over here, 188. That's wide. But this stock, you know, trades in a very big way. And by the way, the initial sell stop means that if this stock triggers 197.10, right, and it closes at 200, you can raise that stop to 192, to this low, 192.66 immediately. Okay. You can also reduce risk by selling some on the way up. I just want to make sure that when I get in the trade, I want to bear the biggest amount of risk on the first day. And I want to make sure I don't choke the trade. Okay. And there's nothing wrong with playing with very tight stops. But I just want to make sure that I don't choke the trade. Sandex, SNDX, Syndex Pharmaceuticals, same play, guys. 14 million shares. I forget exactly why, but look here, printed inside day. We got long right over here, 515 through this high. Okay, at 1910, already sold some on Friday, that very same day, plus 10%, same exact thing. You get a stock that trades very little volume. No one knows about it. News comes out, trades big volume. You wait for that 10 to 15 day consolidation. At the very end of that move, you get the tightness, the contraction, not only in price, but in volume. So far, we've gone through 36 names. We have 1, 2, 3, 4, 5. We have 6 candidates already, all with the same setup. VTIQ, same exact thing. 18 million shares. The stock is trading 256,000 shares. Trades 18 million shares. You wait for that sideways to down action, and you wait for the contraction, and then you get it for the second leg higher. You're never going to catch this first move higher unless you're a fundamental player. And for some reason, you've been holding all along right over here, you'll catch this first move. For us, this is irrelevant. When it has the big move and the big volume, all we want to do is keep track of it. And then 10 to 15 days later, we're going to revisit and wait for the contraction and then jump on the second move higher. LVGO, let's see. Here's another one, PSTI. This is a little sloppy for me, but it's same pattern. 1 for 10 reverse split, 20 million shares right over here. This, I believe, is a COVID-19 play, but you know, this, and they just recently did a secondary offering. But look, it prints an inside day. Look at the volume, guys. 834,000 shares. You can barely see it. And as a matter of fact, the volume is the lowest since this move higher. So here, PSTI, buy stop 1045. Initial sell stop right over here at 951. PSTI. Now, this is for tomorrow. Now, we have no idea which stock is going to trigger. And we only want to get involved if they go to the previous day high plus 10 cents. Okay. After that, what we're looking for a 4 to 5 day move. The target is always up. What the market gives us between that little time frame is unknown. So if by day 4, the stock is only up 2%, it is what it is. That's it. That's what it gave you. You move on to the next one. As swing traders, we are in the moving business. We're looking to get involved in a trade on the first day of a possible multi-day move higher. We don't want to chase stocks on the way up. Okay. We don't want to buy a stock that's already up 4 or 5 days in a row. Someone today in the room put a great article. Okay. If you guys read it, a study done by Larry Connors back in 2007, how stocks that are down multiple days in a row show better returns a week later. And stocks that were up consecutive days, up, 3 or 4 or 5 days in a row, their returns were not great a week later. This is your classic technical analysis where people are saying the stock is up 7 days in a row. That's bullish. No, it's not. The shorter your time frame, the more important entries are. If you have a long-term time frame and your average holding period is 6 months, 3 months, then the entries really don't matter. But when your time frame is whatever it is, 3 to 4 or 5 days, entries do matter. Okay. So let's go on. Let's continue here. So based on those first 35 names, you can come up with a scan yourself. You can come up with the scan yourself. All I'm doing is looking at the top performers in a 3-month basis, but there is a way to write this scan. VIR, again, look at this stock, trades 127,000 shares, 130,000 shares, nothing at all. Big news comes out, whatever it is, 2.7 million shares. Then over here, big volume, 3.9 million shares, relative speaking. Here, 6.5 million shares. They probably did a secondary offering. This is a COVID-19 play. It starts to trade sideways. As you can see here, I tried playing this multiple times. Every time there's a yellow arrow, that's where I got long. 413, right over there, going through this high. 420, going through this high right over here. So far, it has not done much. I got long again on 515 when it went through this high. Not much going on, but you're getting that contraction, and it's a stock that already has a significant move higher. Okay. So even here, the stock is set up again, but I already own the stock, but this is the same pattern. No volume, no volume, no volume, big news, huge volume. Wait for the consolidation, wait for that pullback. Here, down 1, 2, 3, 4, 5, 6 days in a row. Here, had a little nice up day. I got long 327, as you can see here, through this high, 32.31. What's the high over here in this day? $32. So I paid up a little bit. Okay. SWN. This is flagged. It's a stock that I'm keeping track of. The reason why is this is what you call, I guess, a stage one. There's so many names for these patterns, but look, this is a stage one. What you have here is a stock that's been beaten up. The sellers are in control, have been selling the stock nonstop. Then it finally gets to a level where the buyers and sellers find equilibrium. Okay. The sellers are now, the buyers found a value level, and the sellers more than likely pretty much don't have much shares to sell. So the buyers are sucking it up, sucking it up, sucking it up. And that's how you get this sideways action. Okay. And at the very end, before the stock finally breaks this stage and goes higher, what you see is a pattern of higher lows and higher highs. And then it's off to the races. You heard the term, The bigger the base, the higher into space it goes. Okay. The longer it's been going sideways, the longer that more than likely it's going to trend higher. So this stock eventually, if it sets up and it stays above this level here, 260, it's going to be, it might be a good uh, longer duration trade. Okay. And more importantly, you hear the classic technical analysis that says you don't want to buy a stock near a 52-week low because you have all this resistance here. The fact of the matter is, what this base tells you here, that all these guys, they're gone. These are a new set of buyers. And all these guys have sold out of the stock or more than likely have been worn out. Okay. I mean, we found enough names for the most part already. We haven't gone through 100 names yet. I'm going to answer your questions in a little bit. Here's another one, BNTX, another COVID-19 play. There's a theme here, guys. So when I see a COVID-19 play and it's on my list, I'm going to be all over if it triggers. And this one, you see the little yellow arrows. Okay. That's when I went long through this high right over here on this day, through this high right over here on this day, through this high. So far, nothing. Okay. Even though this setup looks like a great setup, okay, it's not going to work every time. That's what trading is all about. Trading is a game of probabilities. All we're doing right now is putting the odds in our favor, stacking the odds based on a particular pattern that we're seeing over and over and over again. And because it's got big volume and there's a catalyst behind it, it's putting a little, the odds in our favor a little bit better than just a random trade. Okay. So this one here, I got long the stock on 515, which I guess was Friday, through this high 49.08, long at 49.14 through the previous day high. This still looks good. I mean, for anyone who did not get involved in this stock, the buy stop would be 49.84, and the initial stop would be right over here, call it 47.90. This is a lot of names already, guys. But I think you get the point now. RRC, just like the other oil name, same exact pattern. Down forever for the last 5 or 6 years. It finally gets to a level. It finally gets to a level where the buyers and sellers find equilibrium. The buyers are sucking up all the shares. The sellers are running out of inventory. They're done. This is a stage, you call this a stage one or base, whatever you want to call it. And then at the very end, you start noticing a pattern of higher lows and higher highs. Here, for this one particular stock, the insiders bought about 1 million shares last month. So one to keep an eye on, one to set up again. All right, so that's 100 names on the 3-month basis. Okay, we go to 6 months, and let's see what we see. But let me ask you some questions here. How do you determine your stock universe? I just put all U.S. stocks, all ADRs, price above $2 a share, and liquidity over 100,000 shares. Okay. Do you execute on the break of high immediately or wait 5 to 10 minutes? I execute immediately. The trade either works or it doesn't work. There is no subjectivity. I have a 50% win ratio. Okay. For those of you in the room, I've been getting into a little habit, which I don't want to continue to do, but just to show you that it's possible. This is my current swing trading P&L. Okay. This is the February market peak right over here. So I'm way above that. Okay. This is with a 50% win ratio. A trade either works or it doesn't work. So when it comes to my buy orders, it's 10 cents above the previous day high. That is it. There's no subjectivity. There is no, let me see it if the volume is trading 40% higher than the previous day. No, none of that. Okay. I am not looking to avoid the unavoidable, which is losing trades. That's going to happen. And this little cycle right here that you see, this is exactly what you see on every chart pattern, every stock. You see the same exact cycle. Everyone's return, whether you're an investment manager, a retail trader, you're a Stanley Druckenmiller, George Soros, Warren Buffett, you're going to see exactly the same thing. You're going to go through a period of sideways action, nothing going on. And during this period right over here, the S&P was doing well. I couldn't gain any traction. And that happens. Okay. And then you get the rip higher. You get a good trading environment when you're really clicking. And then when you're finally clicking, you get this little rug pull, quick, nasty sell off. And then here you get the grind higher. All right. This cycle, you're never going to avoid. And all you want to do is repeat the cycle over and over again at higher levels. I want to repeat this somewhere over here. I want to repeat this up here. I want the pullback up here and then the grind higher up here. That's all I'm looking. Stair step fashion on the way up. Okay. Let me see what else we got. How much do you risk? How much risk do you put? Right. That depends on you. Okay. The way I look at risk very simply, I'm looking at it as a percent of my total capital. So I might risk 1/4% of my total capital, 0.5%, 3/4, or 1%. And a lot of it has to do with the market. In certain market environments, I might risk more, I might risk less. When it comes to an A setup, chances are I'm going to put a little bit more money behind those A setups because they are A setups. Okay. So let's say, for example, hypothetically, you have a $100,000 account and you wanted to risk 1/4 of percent of your total capital, which is $250. Okay. That's what you want to risk per trade. So the way you do the math, very simply, if you have a stock that's trading at $50 a share, okay, and your initial sell stop is 49, that means $1. You take what you want to risk, $250 divided by 1, it means you can buy 250 shares of that stock. Okay. If for some reason the stop loss was at 48, which is $2 away, you take what you want to risk, 250 divided by 2. That means that you can buy 125 shares. Okay. How much should you risk? That depends on you. And a lot of it depends on what's going on with the market. For me, my rolling 5-day watch list, which is my watch list for the last 5 days, tells me a lot about what I should be doing going forward. So here's my list from 5/1. Here's the price where the stock was put into this into the watch list. And you can see here the return since then. So as I'm looking through this, 54%, up 44%, up 19%, things are really clicking. So maybe I want to take advantage. Instead of risking 1/4%, maybe I'm going to go 0.5%. Okay. And then you can also start to notice whether stocks are stalling or they're continuing to move higher. So maybe instead of selling my first piece at plus 10%, maybe my first piece would be plus 15%. Okay. This is the reason why your rolling 5-day watch list is something that I track. This is my main screen over here. Okay. This is all I care about, my rolling 5-day watch list, my holdings, and here's the current watch list. That's it. So this gives you a lot of information. This will give you more information than looking at the S&P 500. So what you want to risk completely depends on you and your trading and how you're doing as far as your trading is concerned. Let's see here. Is it scalable? As your account value goes up from 100 to 250, yes, it's scalable. It is scalable. And if for some reason you're having a liquidity issue, then all you have to do is just put a certain liquidity factor. But when you have a stock, let's say, for example, APT that trades 5 million shares, that traded here 15 million shares, you're going to have no issues filling up your account if you got a $100,000 to $250,000 account. You take a look at NNVC, this thing traded here 12 million shares, 3 million shares. You're going to have no issues with that. If it triggers early, say first 10 to 20 minutes, but has only sold, okay, yeah, okay. Right. So if it triggers early at 9 o'clock in the morning, or whatever, 9:31, 9:32, and it only has traded so far 10 to 20,000 shares, that you still enter. I normally don't. I normally don't. Okay. And what you're going to find is that sometimes you're going to wish that you did, and sometimes you're going to wish that you did not. So what you have to do is find solutions. You need a sample of trades and figure out, hey, how about had you done only half? If you had to buy 1,000 shares, you do 500. And if it keeps going great, you're in. If it fails because it was a failed breakout in the first 10 minutes, you only did half. And after you do a whole bunch of trades, then you're going to start to notice a pattern. But you know, when I'm, for example, at 9:30 in the morning, when I have my watch list, one of the biggest issues that I may come across is maybe a high price stock that's got a $2 spread, or a stock that triggered that has not traded enough shares. Okay. But let's say, for example, hypothetically, it was a stock that was a theme play, something that's in play right now, like the COVID-19. I might take it. Okay. Why? Because look at all the COVID-19 plays that we played last week and what they did. NNVC, 655. Trading went to $11, $12 a share. ALT from 3 to almost 6. APT, huge 30% move overnight. VXRT, this was good for roughly about 15%, I think. Okay, so this is where the rolling 5-day watch list comes into play, and your awareness of what's going on. Okay, let's see what next. Okay, makes sense, good sense. Okay, let's see here. Glue down several days in a row. Yes, you know, glue is, you know, look, it's a decent setup. All right, down 1, 2, 3, 4 days in a row. For me, the stock would have almost triggered on this day. It looks good, right? Buy it through 964 with a stop over here at 922. Either works or it doesn't work. It's that simple, guys. Do you have a watch list for each day? Yes, I have a watch list for every single day. How many days you keep the watch? No. So on any single day, I have a watch list every single day. But I will go through this list as well to see if there's a stock that maybe did not trigger, that is set up all over again for tomorrow or the next day. Okay. But at a minimum, this rolling 5-day watch list is always here because I go over this every single day. So it gives me ideas of what's going on. How many stocks per watch list? How much do you keep up with? Right. So I can have 300 names in my, not 300, but look, I can have 20 names in my watch list. It's all irrelevant. Okay. When I have a watch list, here's exactly what I do. WL, what's tomorrow's day? 5/18. Okay. I'm going to put the names on the list. This is all done before the market opens. The less you do during the day, for me, the better off I believe you're going to be. The more work it's done, that's done before the market opens. Okay. So here, what are the other ones? BMRA, ATHX, STMP, PSTI, BNTX. Here's what I'm doing, guys. I'm going to set an alert at the high, 284. I'm going to set the alert here at the high, 49.74. And once they trigger, It pops up in the screen. Okay. My buy stop is still 10 cents above. It gives me more than ample time to put the order in if it's not already in place. I'm not looking at intraday charts to see if the stock has some type of volume pattern. No. So when the market opens, I'm going through the list. And if they have not triggered, I'm just putting my buy stops in. And the market is either going to get me in or keep me out. It's that simple. Will either get me in or keep me out. That's it. If it doesn't go through that high, I have no interest in the stock. I'm not anticipating any breakouts. Do you have a minimum stock price? Usually above 3. I think if it's under 2, I don't look at it. But what's more important to me is volume. Okay, so this stock is trading at $3 a share. Traded 2.6 million shares on Friday. That's enough. The average 20-day volume is 5.5 million shares. It's enough. Is there a limit on how high you will chase a stock in a certain trigger? Yeah, I don't chase stocks. I don't chase them. If they go and they run away, they run away. It's no big deal. We haven't had an issue finding winners. So if they go, they go. But I don't chase stocks. Okay, let's see here. I like the way Apple, AMD are setting up. Yeah, nothing wrong with that. Nothing wrong with the Apple and AMD. What we're trying to focus on are the fastest moving stocks. That's what we're focusing on. And the way you find them is by looking at the top or the best performing stocks in a 3 months, 6 months, 1 year, and a year-to-day basis. That's where you're going to find all the big winners in the short term. Not long term, the short term, which is what we're looking to accomplish here. Would you view entering a stock near the close of the day once we pretty much can see the candlestick fits your edge? Would you view of entering a stock near the closing day once we pretty much can see the candlestick? No. Look, if it triggers, again, if it triggers at 9:32 in the morning, I took the trade. I understand that sometimes you want to wait for confirmation because we don't want to take losses. I don't have an issue taking losses. This is not a right or wrong game. The only issue here is staying wrong. When you have a short-term time frame, which is 1 to 5 days, you're going to be wrong a lot. Okay? And even if you have a long-term time frame, you're going to be wrong a lot as well. The only difference is that when you have, look, there are two type of stops. You have a tight stop and a wide stop. A tight stop, you have a lot of benefits because your losses are going to be smaller, your risk reward RR might be a little bit better, but you're going to get a lot of stop outs. But if you have an issue taking stops immediately, then that's not for you. Then maybe for you might be a wide stop. For example, you get into a trade and you put an initial 20 to 25% stop. And that's going to keep you in the trade for a long time. That's going to allow the stock to go up and down, and it'll keep you for 3 to 6 months. It doesn't guarantee that you're going to get a big return. It's just going to keep you for a longer time frame, more than likely, and it'll give the stock room to work out, and that's fine. I am looking to take advantage of these small moves right over here. For example, Netflix down 1, 2, 3 days in a row, and then it has a nice little move higher. This is all I am looking to do, is get what the market gives me within this time frame. Now, years ago, if you read, IBD, they have the 20% rule, 20% gains, 7% losers. And if you go to their learning page, it says that you want to sell most of your winners between 20 to 25%, because what usually happens when you get a 20 to 25% return is that they go sideways to down, and sometimes they resume the uptrend, sometimes they don't. And what you want to do is, as swing traders, like I said before, you are in the moving business. All right. I want to get involved on the first day of a multi-day move. I want to get rid of this right over here and then go on to something else that's just getting started right over here. And I want to do this over and over and over and over again. Now you can make up a return like 20% because you can say to yourself, I'm risking 7%. So if I'm going to risk 7%, then I have to make sure I make 3 times my risk. You can do that. Okay. To me, that is, I'm not going to say nonsense. To me, that doesn't make much sense because a stock doesn't have to give you 20% only because you're risking 7 and you want 3 times your risk. A stock doesn't have to give you that. All right. I rather base my targets based on this time frame, 0 to 5 days, and whatever the stock gives me within that time frame, the way the market moves, the way stocks move, that's what I'm going to take. Okay. I hope that makes sense. Because you can make up whatever target you want. You can say, I'm risking 5, so I got to make at least 15. You can do that all day long, but you're just making stuff up. Okay. When you get out on the way up, I want to sell most of my inventory on days 3, 4, 5. I want to sell here. I want to avoid this. Okay. For example, you look at Netflix. Netflix has been going sideways for 2 years. But in the interim, it's had a lot of nice little moves in the interim that you were able to take advantage of. So I want to avoid, for my time frame, I want to avoid sideways to down action. Okay. I want to keep the capital moving. Get involved in the first day, start selling on days 3, 4, 5. So that's when I get out on the way up. Do you put market order or limit orders when you, okay. I put buy stop orders, which become market orders. That's because I am around. Okay. If I was not around at the open, then you will have no choice but to put buy stop limit orders. Okay. And the reason why, if you're not around at the open at 9:30 in the morning and you have a stock that the buy stop is 32.10, and for some reason gaps up $3, you don't want to pay, you don't want to pay up $3. So you're gonna have to put a buy stop limit. So buy stop is 32.10, buy stop limit, give yourself some room, 32.30. Okay. I do buy stops, but if I wasn't around, if I wasn't going to be around at the open, I'm going to put buy stop limits. Okay. 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 Thank you. Thank you, Joseph. Let me see what I have here. What are your thoughts? How do you play stocks that have a huge move like, well, APT? Well, that's the whole point. That's the name of the room. Find these stocks before they break out. That's what we do, right? This is where we got involved right over here. Going through this high at 1338. What's the high here? 1327. Where did I get executed? 1338. My buy stop was already in place. And here, sold a bulk of it, almost all of it. I got a little small piece left to see how high it can go. So by the time that you read about this on Twitter, on Stock Twits, and you hear people talking about the stock, it is simply too late. You need to be able to do your homework beforehand and make sure you have the list handy beforehand. Before the market opens, I already have my watch list. My alerts are set. I already know how much I'm going to risk and how many shares I have to buy. Then it's just a matter of executing. That's it. And what you want to do is you want to study the way stocks move. Okay. And we went through 100 trades, and I've given you probably the best scan out there. It's not even a scan. It's just you're going through the top performing stocks on a few different time frames, 3 months, 6 months, a year, on a year basis, and you see the same pattern. I think out of those 100 names, about over 50 of them had the same A+ setup. That is it. That is all you need. Now, all you have to do is wait for the contraction or the mean reversion play like this right over here, and then just execute. Okay. How much is, how much a stock is up from before? Like if a stock popped 500% in a few sessions and then it consolidates, Well, look, 500%. Um, right. Look, it's possible, right? So this stock went from 5 to 40, right? Then it pulled back. Um, so again, all you have to do is wait for the consolidation. Um, if you can give me, more of an example than just saying 500%, but APT is a stock that went from 5 to roughly whatever. This was 600%. And then it came crashing down. But then you still had the opportunities here. This happens based on this was a COVID-19 play. You had the mask, you had a day trader, people got involved. That's what usually happens. But you got the sideways to down action a few days later. Uh, so you buy stock. I don't buy options, but you can. I don't buy options. With this strategy, what percent return per year is common? Don't know. Don't know. That depends on how well you execute. Guys, you can take, it's all about execution, right? You can take my trades, every single one of them, since I'm a 50% trader, and you can do the exact opposite. And with the proper risk management and execution, you will be profitable. Doing the exact opposite of what I do. You can take my same exact trades, and perhaps you're more aggressive than me, and you have better execution. And I might make 20%, but maybe just by you putting double the amount that I put, you'll be up 40%. Maybe you're a little bit more aggressive on taking your stops immediately, and that can increase your return a little bit more. So what percent return you can look for any strategy is partly based on your execution. We all execute differently. I know when I go through my little with my little scanner, my little Excel sheet, and I'm able to simulate certain things, just by tweaking just a little bit, you'll be surprised as far as the difference in the returns. So returns is all about execution. Something like this, a stock, I mean, we caught, I don't know, 6, 7, 20% winners last week. Uh, NNVC plus 20%, ALT plus 20%, SNDX 10%, APT plus 20%, VXRT 15%. I mean, we caught about 5 or 6 plus 20% movers. Now, let's say, for example, I only put 2% behind each idea, and all those 20% movers only made me 5%. But someone else was a little bit more aggressive and put 15% each idea, and their return was 20%. So it's all about execution. Frank, do you use volume in your analysis? I'm not sure what you mean by volume, but when I have a setup and it triggers, right? Let's say, let's say, for example, it's not at the open, right? Sometimes at the open, I'm going through a stock, and I'll give you a perfect example. XLRN down 1, 2, 3, 4 days in a row. My buy stop was right over here at 90.56. Okay. 10 cents above this high, 90.66. When it triggered, I couldn't take the trade. It had a $1.60 spread, right? I couldn't take the trade. But if it's like during the day, 10 o'clock, where the spreads are it's already tight. Am I looking at the volume and saying, oh my God, the volume is 40% below the 20-day average? No, no, no. Just because a stock has bigger, higher volume than the previous day, whatever the case may be, it doesn't mean it's going to work out. All right. There's no subjectivity. I know listen, I know other people who have trading rooms. They're sometimes they're vague with their entries. Okay. and it's all these subject things. Yeah, if it breaks this level, it's great. But if the volume is not there, then I'm not going to take it. But then if it works out, then they took it. So no, look, either it goes or it doesn't go, unless you've done your own studies, right? And you have a sample size of 250 trades, and you say, look, these 125 losers, the reason why they lost is because of the volume, then that's a different story. But besides that, that's what we're reading all day about volume and all these, different things. As you can see here, the A+ setup that we spoke about today, what was the key? Price contraction and volume contraction. That lowest volume day, that was the day. That was a day that tells you, hey, we might be ready to move higher after that contraction. And why do we have that contraction in price and volume? Like I said before, it's very simple. You have a stock that moves higher and it trades, whatever it is, 10 times what it usually does, 150, whatever, 30 million shares. That's not mom and pop buying the stock. That's probably an institution that's got to get involved with the stock. Okay. And they got to buy slowly but surely. They have to buy more and more and more. So whoever is looking to sell the stock after that first initial pop, they're sucking up the price. Sucking up the shares. And after 10 to 15 days of slowly but surely sucking up the shares, you sell, I'm going to gobble it up. And at the very end, when that seller no longer has any more inventory, that's when you get the price contraction. And that's when you get the volume contraction. And that's when it goes. Again, we went through those, 100 names, and 50 of those names had the same setup. And at the very end, you got both things, price contraction, volume contraction. Mm-hmm. No. So do you mean, are you looking for, it says here, are you looking for a volume to contract when pulling back and higher volume on breakouts as confirmation? No, my only confirmation is going to the previous day high. That is it. Okay, let's see what the questions we have here. Okay, all right, so we have all these names. All right, let's just make it really quick here. Let's go back to here, the universe. Let's go 6 months. Let's see if we can find something. Sometimes the names change a little bit. As you can see, the names are changing just a little bit. And throughout the day, so like I said, so during the day, 99% of my work is already done. If the stock is not on my list before the market opens, chances are I'm not taking it. I only run one scan throughout the day where I might take trades from. But if a stock is not on my list and I'm not buying it just because I saw some option activity on it, no, if it's not on my list, it's not on my list. So throughout the day, all you're looking to do is to execute. And what I do also throughout the day is go through charts, and something like a light path, I see that's got a lot of volume. What was it here? 6.2 million shares. So I'll write it down, and I might go to Finvis, okay, and see what the news was. And I might write it down here, okay? So that way, for some reason, whatever this company does becomes a theme, then I know exactly what they do, okay? See, like this one here, COVID, 198 million shares, COVID-19, okay? So now I know. So now this is on my list. I know that the COVID, stocks are in play. This triggers, I'm all over it. This is how I'm going to prioritize my list if there's a theme around it, if there's some type of theme going on. So now, see, look, AUPH, 41 million shares, trading sideways here. It's got that mean reversion play down 1, 2, 3, 4 days in a row. Buy stop 1749, initial sell stop right over here at 1660. Okay. If you have any questions, just put them out there, because that's normally when it gets a little bit more informative. And you get more out of the meeting. See, BLPH is another COVID play, right? So this is already on the list. So far, we've gone through 67 names, call it 167 names with the first 100. And we come across maybe one name brand company, Zoom meeting. And Zoom is fine, right? But look, everyone's talking about it right now. It's fine. This is a great day trading stock. But look, it was a little bit different here. Okay. This is already on the list, BMRA, VIR. This is not bad, right? Tesla. Hopefully this doesn't gap up, right? This is a good setup for me. Anytime you have a very high volatile name, like a Tesla or a high price stock that moves a lot and it prints such a tight candle. Okay. I like it. I like Tesla going through 805.15, buy stop, 805.15, 10 cents above, initial stop. Right. So if you're aggressive, you don't mind being stopped out early, 786. I'd rather go here as the initial stop, 764. I know it's far away, but I don't like choking trades. Okay. You can do that. And what typically happens, and some people do that, which is great. But for a majority of people, especially those who are just getting started, getting involved with really tight stops you got to have a different mind frame. We usually grow up and we don't want to be wrong. If it's wrong, it's an issue. In trading and you're wrong, that's not a problem. Staying wrong is the issue. So you can work with very tight stops. All right. $1 stop maybe on a high price stock of $2. And what's going to happen is you'll get a lot of stop outs because you're being stopped out within the noise. Tesla trades, $10 to $15 range. So you use a $2 stop, you're going to get stopped out within the noise. However, if you do that on a consistent basis, what's going to happen is that you're going to come across a trade like a Tesla that might go up $40 to $100, right? Within that little 4 to 5 day burst. And that's going to pay for all those little small stop outs. So you hear some guys bragging about big RRs, my risk reward trade 7 to 1. It might be for this. They might have their percentage win might be low. But when and they take a whole bunch of $2 stop outs, but when they get that one win and they ride it for 40, 50 points to high price stock, it pays off for a lot of those trades. I don't know if you guys recently read in the Wall Street Journal last month, that one fund that was up like 3,000%. It was a black swan fund. And very simply, all they do is take small losses, just like that VIX 50 cent trader. Small losses for an entire year buying VIX 50 cent VIX options for an entire year. Loss, loss, loss. Finally, it goes and he's got a humongous payday. All right. So if you don't have an issue taking those tight stops, then you can play them really tight. But if you do have an issue, you got to change the way you think. And that takes time. That's the reason why you can either go with a random entry and a very wide stop, and that'll keep you in the trade for a little bit longer because usually if it doesn't do anything by 2 or 3 months, that's usually when most people kick it. So a wide entry might be better off for most people unless you change the way you think. All right, so this is on the list. All right. I think that's enough, right? I think we got the names on the list for tomorrow are pretty much irrelevant, right? We got a few names for tomorrow that might be winners. I think what's more importantly, what I hope you got out of this is this over here, the scan, where now you can run this on your own. You can do all type of studies, uh, and maybe create your own scans, right? So I gave you something to eat for tomorrow, but here you can walk away with this and eat for the next whatever 2 or 3 years, whatever the case may be, and create your own scans based on this over here. How do they move? Are they low price stocks? Do they have to make money? Do they have to have a certain amount of sales? Is it really true that stocks only go up from the highs? Or maybe do they also go from the lows? Right? These are some of the things that you should be asking yourself when you start reading all these things. Okay? Some people only talk about the stock has to be near 52-week highs, and then it doesn't count. But a 100% move from here to here is the same from here to up here. It's all worth the same. I can't see your list. So tiny. Where do I go for your list? Yeah, look, tomorrow's list is right over here. Okay. CAPR. Where are we? CAPR. Tesla. BNTX. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 names. That's more than enough. 10 names. Either they go through the high or they don't. Any more questions, guys? How much percent you consider volume needs to be less than the prior day to hit your scan? For example, an inside day bar. Right. So look, when I run my inside day, the context, the inside day is just a candle. It just tells you that there hasn't been much movement. What's important is the context. Okay. An inside day, you can use an inside day for longs and short. Okay. So an inside day, for example, right over here, if the stock is up multiple days in a row, to me, that'll be a possible short sale if it's able to go to the previous day low. So the context of the chart, it's what's important. Okay. Right over here, the context of the chart. That's what's important. Not just it printing an inside day. Because for example, when I go to the inside days, I got, oh geez, 603 names printed an inside day. Okay. This is not one that's actionable for me. Okay. This one, yeah, this one's good. Down multiple days in a row through this high. LVGO, this is not an inside day that's actionable for me. Stock has already had a tremendous move. More than likely after this, it's probably going to go sideways to down. So this is not for me. This inside day, it's okay. All right. Down multiple days in a row. This is one of our favorite setups. UNFI, this is not an inside day for me. Okay. There's no setup here for me. All right. Because if I buy this stock here going through 1994, where's my stop? I mean, this stock can go all the way down to the 10-day moving average and still be technically intact. So this is the reason why you don't want to chase stocks. And if you're getting stopped out above the 10-day moving average, that means that you're probably buying way overextended. So the context of the chart is what's important. This inside day, not for me. I need to see more sideways action. PSTI, yes. Love, yeah, not bad. Nerve, no. This to me is probably a good short setup. Up huge here, going sideways. It's got to get through the low. Okay, so I hope you get that. Your thoughts on SRNE? Yeah, there's nothing there in SRNE. Stock went from 4 to 8. You want to day trade a stock? You can day trade it, but now you're gonna have to go to a shorter time frame. But here's a stock that more than likely is the same thing as what we just went through for the last hour. Stock is trading. Not much volume. Suddenly news comes out. This was a COVID news that came out on Friday. At some point, it's going to go sideways for 10 to 15 days, and you wait for that contraction. Sava, there's nothing here with Sava. FDA, dementia news, no good. Nothing there. There's nothing there. I mean, it can bounce, it can go up, but that's not what we're looking for. EQT, not for me. When I say not for me, guys, that doesn't mean that it can't work out. Anything can work out. It's just not for me the way I look at charts. We're good? All right. Any more questions? Sorry about that. All right, guys. I got to go watch the Michael Jordan series, last 2 episodes. Did you answer GDMA? Hold on. GDMA. It's an ETF. Traded 1.2. Traded 1,000 shares. There's nothing there for me. Okay. Again, what I'm looking for, I am looking for something that's going to move up. No. There's no reason to be sorry. There's nothing to be. There's nothing there. I don't know anything about. I don't know what they do multi-asset, but based on what I'm looking to do with my swing trades, this doesn't fit the criteria. Number one, because I only traded 1.2 thousand shares. As far as what the ETF has inside, I have no idea what they have. I have no idea what they have. Again, what it is that I'm looking to accomplish, I'm looking for these type of moves right over here. That's it. I'm looking to do this over and over again. Sorry, GMDA. Okay, so GMDA, yeah, this is something that more than likely is going to show up as one of the top performing names in a 3-month, 6-month basis. It had a big move from $3 to roughly $6 a share. Huge volume, relative speaking, but now it just needs sideways action. So let's just go back here and let's punch up GMDA. Let's put it here on a 3-month basis. It's number 148. Okay. All right. So it's number 148. So GMDA is going to need more sideways action. So GMDA, let me give you an example. GMDA to me is like somewhere right over here. All right. At the big move, now you have to wait for the sideways action. So for me is not actionable because I want the 10 to 15 days of sideways action. Okay. I believe that once the bigger the base, the higher into space it goes. 10 to 15 days is not a base. It's not big, but that type of contraction normally, when you have something that's only going sideways for 2 or 3 days, in my opinion, you can see it for yourself. That burst is not going to be as big. That's it. So yeah, so it's not actionable. Give it a few more days. It doesn't mean it can't go higher. It's just that I want more sideways action. I want more of this. Okay. On that context of gap up, where does Twilio and FSO? Yeah, Twilio, that's not, to me, that's not actionable. Not yet. Okay, FSLY, all right? It's not actionable. I mean, this stock right over here can go all the way down to the 10-day moving average, which is 20% away and still be technically intact. Listen, I know there's a lot of people out there who are still talking about who are still talking about breakaway gaps, like if it was 1990. They're talking about lockout rallies. This ain't 1999. Okay, it's just this. Look, this here, it's going to go sideways to down. It's going to give you a better risk reward trade. And this stock right over here, 39.50, it's not for me, right? But this can go sideways for another 10 to 15 days and stay at the same exact price. And because of the consolidation, it'll make it a better risk reward trade. Because here, if you buy this here, because for some reason you read the story is great, you got a big institution from New York, I think it's Abdenel, who owns a big piece of it, and they bought shop 300 years ago and they're up 1,000%. Yeah, I know the whole story. Okay. But on the risk reward ratio here, you're going to have to give it a very wide stop. So if you like this stock and you want to buy it now and you don't want to wait, you're going to have to give it a 20 to 25% stop. But this stock right over here, okay, it's already flagged, right? Which means that my flag, the stocks that I flagged, I go through that list every single day. I have about 130 names. I go through that list every day. This stock is flagged, right? You mentioned Twilio. It's also flagged. Okay. Eventually, it's going to set up. They're not going to run away. All right, Frank, what is the filter on your last column? This is just year-to-date change. All right. That's it. So we hit it and we look at the best stocks on a year-to-date basis. Okay, that's what it is. W. Yeah, for me, it has to consolidate. Okay, and it doesn't mean that it's not that it won't move higher. That doesn't mean that. It had a big move from 50 to 190. That's huge. That's a huge move in a matter of a month and a half. So what are we going to expect from a stock that went from 50 to 190 in a month? Yeah, maybe it goes up another 5 points, but stock already made its big move. So you look for a high number there in that filter. We're looking at the top 100 best performing stocks on a 3-month basis, 6-month basis, 1 year, and year to date. The top 100. Can you trade the 3 times ETF? No, you cannot trade the 3 times ETF with this rule. I don't know exactly what rule you're talking about, but when it comes to the indices, you want to buy weakness when it comes to the indices. Okay? When it comes to the indices, you want to buy weakness. All right? I know we hear all these things about, all right, so 3 more. Yes, right. Yeah. So with the indices down 3 days or more in a row, yes, that's good. That's when you want to buy. All right. Typically with the indices, I want to go and wait through the high, but with the indices, you want to buy weakness. If you look at the SPY, all right, you want to buy weakness. If you take, I put a chart this week somewhere on Twitter here. The S&P has done nothing for the last 2 years. It was at 286 on 126, 2018. And all you hear about, all-time high, blue sky territory, all-time high, blue sky territory. No. You always hear these things with these technical analysts where if it hit an all-time high, there's no sellers above, so there's no resistance. There's no one's looking to sell. Yes, there is. The people who are at a profit are the sellers. That's who sells. So when it comes to the indices, you want to buy weakness. All right. You don't want to wait until, if it gets back above this high, then all is good. No. You take a look at that. This is the SPY. Done nothing for 2 years. Okay. But just think about it. Instead of buying the highs, what about if you actually bought the weaknesses? Different situation, different shape, right? You take a look at some of the growth, uh, the XBI. Everyone's talking about biotechs now. After the biotech sector had a tremendous move from 65 to 105, they're talking about this breakout. Where a stock has come from is important when you're talking about breakouts. All right. So just because the stock is breaking the previous resistance level, that doesn't make it a breakout. This, to me, this type of cookie cutter breakout is prone to failure. Why? Because it spent so much energy getting there in the first place. 65 to 100. Okay. What do you expect? That's a big move in a straight line. So even look at the XBI, look, everyone gets excited at the highs. So when it comes to the indices, sector ETFs, I think it makes a lot more sense to get excited uh, when they're going down during weakness. Okay. We don't go to Macy's to buy a suit and say, hey, I don't want it because it's on sale. So get excited with the ETFs and the indices on the way down, okay? Because even if you look at the S&P 500, done nothing for the last 2 years. If you look at this, which is one of these, Momo sectors, pretty much nothing for the most part, okay? But if you got involved here at the lows and you get excited at the lows, it's a different story. All right. Once you are in the trade, price stalls but hasn't hit your stop after 4 to 5 days, you automatically exit. Yeah, I hate to say automatic. Look, when it comes to trading, there are no concrete answers. Okay. But if things are moving like they've been lately, I'm fast with the trigger because if things are really moving and things are going well, and I have a stock that hasn't made a move in 4 to 5 days, next, right? Next. When I go into a trade, um, I don't go into a trade thinking it's got to make me money, right? I go into a trade knowing that it could be a winner and a loser. I already know my buy stop, I know my sell stop, and anything can happen. Okay. So if it doesn't work out or it doesn't give me that 15% that I'm looking for within that time frame, that's okay. It's all part of the game. All right. All right, guys. Great chatting with you. Have a good night. And I'll see you guys back on the stream this week. All right. Have a good one, guys.